know I'm kind of late, you know. I didn't really put it out there that I'm going to get on, so I'm a little late, but I just wanted to put something out there, right? That's how I do sometimes. So let's see if we can get some people up in here. Hello there, I see you. So I want to make sure that people know that I am doing Instagram, um, YouTube, and Facebook all at the same time. Thanks to technology. Technology is amazing. Technology is amazing. So hey, Mama Simone. Okay, so I'm gonna go ahead and get into it. Because it just came to me somewhat today. I was talking about something and then reading something, and then I was like, yeah, I think I want to talk about it. So, pretty much today I'm gonna be talking about risk versus rewards, right? Um, so this came about because for those of y'all that know or don't know, I trade. So I do trading. I invest in the companies using the stock market and also real estate investment as well. So I pretty much got my hands in like all different pots and everything, but I'm doing what I see my mentors doing. My mentors are not sitting here just focused on one thing in one market. They are looking at everything. So, obviously spacing it out over time and investing smart and wise, but at the same time, they're not focused on just one thing. So, if I want to get to where they are, then of course I'm going to do what they're doing, right? So I'm going to study them. So I'm going to talk about someone that I actually somewhat, study and just recently started pretty much studying this year. Actually, so that's what prompted me to get into the stock market and, pursuing trading more frequently, I would say. On top of that, so again, this topic is risk versus reward. Okay. So I already said what I do, how many markets I'm in, and everything. So let's just jump into it. So the first things first, what is the definition of risk, right? So in financial terms, it is defined as a chance that an outcome or investment's actual gains will differ from an expected outcome or return. Okay. So simply put, this is pretty much the risk includes the possibility of losing some or all of your investment, your initial investment. So what I suggest to everyone, hey, how are y'all doing? Thank y'all for coming on. Um, what I'm suggesting to everyone, any person that I interact with, that partners with me, that ask me questions as far as, just on in general, or that is looking to me for mentorship, I tell them, please make sure that you only invest when you can afford to lose to start. If you can only afford initially $25, then that's all you can afford, and that's okay. Okay. Please do not feel bad for not being able to start out with thousands of dollars. Everyone does not have that. Everyone is not capable of that. You need to know where you are and stick with that. Okay. And then grow over time. And I'll talk about that as well later. So, definitely making sure that you focus on what is the risk, understanding what the risk involved, right? And then the second thing is what is the definition of reward? So in financial terms, again, the concept that return or yield from an investment is proportional to risk, right? So therefore, investors will demand a greater reward where the risk of loss is greater. So I'm going to use one of the things that I do, which is day trading. Okay, so I do foreign exchange, binary options, and cryptocurrency, as well as invest in companies using the stock market. Okay, there are risks associated with every single market, be it real estate, the stock market, trading, all of that. There are risks involved. There are different types of risks, different levels of risk, right? So when we're talking about trading, what we do and what I specifically do is I tell people and I suggest to people that anytime you enter a trade, your profit needs to be at a minimum double what you are risking. Here's why. This is at a minimum. You need to be looking for a profit double what you are risking. Because if you enter a trade, you cannot predict what any market is going to do, whether it's stock, real estate, trading, cryptocurrency. binary options, foreign exchange. You cannot predict anything. You utilize certain things. Either it's fundamental analysis, right? Or technical analysis, or you do both. But you do your due diligence, you do your research, right? So therefore, when you do those things, you're looking for the situation that's going to give you the higher probability of being able to receive that profit. So that's why we tell people that they need to make sure that you need to, look at getting a higher profit than whatever it is you are risking. She says, yes, the stock market is making me want to pull my hair out right now. Listen, look, I saw my account and I was like, oh my God, what is going on right now? But at the same time, I thought if it gets a little lower, this is a prime opportunity for me to buy. So that's another way to look at it, right? So pretty much that's it on the risk versus reward as far as the definitions go. So I'm going to talk about three rules that Warren Buffett has, right? So this is probably a year or two ago that he put it out, but I'm just going to say them. So Warren Buffett has three rules. Rule number one, okay, is to make sure that you do not invest in single stocks. Now, me being a newer stock investor or company investor via the stock market and everything, I learned this the hard way. I didn't have people around me that were talking about stocks at the time. It was more so about, real estate investment, of course, and then just regular trading, foreign exchange and cryptocurrency and stuff. And once I got into a certain circle, that's when I started to hear more about stocks. And so I kind of dove in. I did a little bit of research and then I dove in. And then once I dove in, I started to do more research. So now that I know, I've started to make some adjustments. Okay. One thing that you will know with me, I do not tell people what stocks to invest in. I will not, because you will not blame Leona Clark. You will not blame Prosperity Calls for anything that you do, because you are an adult and you make your own decisions, correct? So I will tell you, hey, make sure you do your due diligence, do your research. I personally look at Warren Buffett's portfolio and then I do my research and decide if this is something that I want to do. He has too many stocks and everything, but I'm just saying I use that as like a guide, pretty much. If you have one of your few living stock gurus that's telling you certain stuff, you look, and just see if what they're saying applies to you or it resonates with you, and then you go from there. Okay. So rule number two is to know your risk tolerance and where you are. Okay. So with knowing your risk tolerance, you have to make sure that on top of that, you diversify your portfolio. Please do not, when I talk about trading a lot, when I talk about investing in the stock market a lot, or I talk about, real estate, whether I'm talking about just one of those more than I'm talking about another one, that's not me telling you to only do that. Okay. I told y'all my hands are in different pots, but that's because that's what I'm seeing my mentors do, and they have multiple millions, right? So if they have, they're multimillionaires, why in the world am I going to sit here and do something opposite of that, right? So diversifying your portfolio is definitely key. Also, yes, ma'am. I said that earlier too, but I'll repeat that because that is a very good point. Only invest what you can afford to lose. That has always been my rule as well. So we on the same page when it comes to that. I tell that to every new trader, every new investor, whatever it is, please only invest what you can afford to lose, because you don't want to be one of those people that become, distraught and everything because they've lost all of their money, right? They've invested way more than they can afford, and now they're in a hole and in bankruptcy and all kind of stuff. So please don't do that. Please only invest what you can afford to lose. So again, knowing your risk tolerance. So if you're one of those people that can handle, things that are, very volatile, like certain stocks, right? Certain currencies, indices. Like I trade indices now, and I actually enjoy it. But it's because I built myself up to that. So when I first started trading, of course, I wasn't talking about trading, US 30 and S&P 500 and NAS 100. Like heck no, that moves too fast for me. But now I'm like, I don't want to do certain things. I want to stay over here because that's more my speed. And I like binary options because that's more my speed, right? And on top of that, I still invest in companies using the stock market. So I have my buy and hold, right? I receive my dividends every quarter, right? But on top of that, I do my give me now, right? It's not just everything is gimme, gimme, gimme. No, I have my buy and hold with my real estate and with stocks. And then I have my gimme now, gimme now, gimme now. Okay. So that's pretty much what I do. And I'm not telling you what you will do. I'm not telling you what you better do. All this is a suggestion. Okay. And in me doing my research and of course passing on what I'm learning from my mentors. Okay. So again, for those of you that just came, thank you very much. I'm talking about risk versus reward. And I am on Instagram up here and then YouTube and Facebook on my laptop. Okay. So, like I said, knowing your risk tolerance for where you are. On top of that, if you know that you can't handle volatile type of markets or whatever, then you need to consider safe investments. Okay. So that way you can still reach your financial or monetary goals. Right. Rule number 3. So again, these are Warren Buffett's 3 rules. Rule number 3, all right, is to never panic and stay the course. So for the sister that was saying that the stock market was like pulling her hair out or driving her to pull her hair out and everything, listen, you have to be patient. You have to stand your ground, okay? And look at, when things move in a certain direction, is this creating an opportunity for me to gain more? So for me, if certain stocks that I'm invested in or companies that I'm invested in with the stock market or whatever, if certain stocks are going to a particular price point, I'm looking at it as this is an opportunity for me to buy. Now I could get more shares because they're providing me dividends, right? That's how I'm looking at it. I'm getting paid every single quarter for however many shares there is that I have in this particular stock, right? In this particular company. So therefore, it's just best for me to just ride it out and then purchase more. And when I get to the point or when it gets really high, if I say, oh, I want to sell, now I can sell, right? So just keep these things in mind. If you know that you do not have a tolerance for this type of stuff, then definitely, like I said earlier, you need to consider safer investments. Okay, things that move a little slower, that are not volatile, so that way you don't mess around and have a heart attack. Okay, we don't want anybody having a heart attack and they're trying to make money, right? Um, so and then on top of that, like I tell people with Forex, when we're getting into trades and everything. So like I said, I don't think I said it. Now that I think about it, I didn't say it. So I'm the founder of Prosperity Cause. Geez, I'm so quick to talk about risk versus reward. But anyway, so I'm the founder of Prosperity Cause. And so pretty much the foundation for that is to teach people how to trade, right? But also we talk about stocks, we talk about real estate investments. Our network has grown with partnering with certain organizations. So it has actually helped me to be able to help way more people. So when we, get on the calls, Tuesdays to Thursdays, and we're entering trades, I'm talking to them about making sure when you put in a trade and you say, I see what I see, this is a great trade, and you put in your take profit and you put in your stop loss, leave it alone. Walk away. Do not sit here and try to watch it and oh, I'm gonna get out real quick. No, Warren Buffett said it. Stay the course. Stay the course. Know what you were looking at, right? And make sure that you just continue to stay the course. That's it. And if it doesn't go in your direction, you practice risk management anyway, right? You utilize the risk to reward ratio. So therefore your profit was going to be more than your loss anyway. So even if you did lose one trade, but then you got or you profited five of them, you're still in profit, right? It's the same thing with stocks. It's the same thing with real estate. You have to look at the numbers. One of my friends says that a lot, and she's a real estate investor. You have to look at the numbers. The numbers need to make sense to you. So if you know that you can profit more than you're going to risk, this is a good opportunity. If you can't, if there's no way to get more profit than what you're risking, then you need to walk away from that, right? That is the goal, is to get more, gain more, build more. That's it, right? So when we're talking about building more, now we go into compounding our money. Okay, so if you're looking to make additional income and you're looking to, get into the stock market, you're looking to trade, whatever it is you're doing, the goal is to compound your money. It is suggested that you start small. It is suggested that you start young. That is one of the things. Don't wait until you're 30, 40, 50 years old. If all you have is $5, that's okay. Start. Start somewhere. Starting somewhere is better than not doing anything at all. Okay. Now, when we're talking about the compounding your money, right? There are plenty of compound interest calculators out there on the internet. So please utilize the internet. That's what it's here for. It's going to help you. Okay. Now, compounding is pretty much about time in the market. It's not about timing in the market. Okay. It's not about timing of the market. It is the time that you spend in the market. That's why you're compounding. So if you start younger, right, you invest over a period of time, then your money is going to compound. The interest is going to build. So I use, let's say, like I said, in the stock market, right? So I invest in companies using the stock market. Well, they pay me dividends, right? So when I receive those dividends every quarter, you know what I do? Reinvest that into the stock market. I don't pull that money out. I don't put it somewhere else. No, I reinvest it into the stock market. So that way I have more shares. Then that way I get more dividends, right? The more shares I have, the more dividends I receive every quarter. Okay. So the other thing is when I talk to people about foreign exchange and we're trading and everything, we have something called, it's either, everybody's different. You can call it a compound chart or a growth chart. Either way it goes. With this chart, it shows you, or you can put in your balance, and then you can say how much you're going to risk. So I tell beginners, do not risk more than 3% of your balance on each trade. You are a beginner. You are learning. You have not been trading that long. Okay. So you only risk 3% of your account. Okay. But at the same time, that means that you stand to grow 3% each trade. So if you start with an account of $250, right? And you grow that to over $10,000, right? You do that with 3% growth. You can do that in 125 trades. Now I know some people will say, well, 125 trades, that's a lot of trades. Not really, if you're a person that's trading 5 times a day. If you're trading 5 times a day, then you've made over $10,000 in less than 30 days. Okay. So this is for people who want money now, right? And they can handle volatility. Okay. They can handle high risk, but even though they know that it's high risk, they're still using proper risk management. Okay. They're still utilizing the risk to reward ratio. We're looking for twice the profit of whatever we stand to lose at every single time, every single trade, every single stock opportunity, whatever it is, we're looking for double the reward of whatever it is we're risking. Period. That's a minimum. We're not doing one for one. And I say this every single time we get on the trade calls. I say it all the time. There's other things that I say, but that is one of the things that I say all the time. We do not do one for one. We do 2 times the reward for whatever we're risking. Every trade. Okay. So with that being said, I pretty much talked about, the risk to reward, the Warren Buffett 3 rules. Please, ladies and gentlemen, if you desire to be or to get somewhere or whatever, look for mentors, review them, watch their interviews, look at their portfolios, do your research, do your due diligence. Okay. Don't just sit here and say you don't have the information or you don't know. If you don't have anyone right next to you or in your network or whatever that can help you, reach out to me. Okay? You can send me a direct message. I have no problem with answering certain questions or whatever. I'm not gonna give you everything for free, but I will definitely, do what I can to help you because there is too much money out here being circulated on a daily basis to where we are not able to have more people that are wealthy. It makes no sense to me. Okay. So again, when we're talking about any type of investing, when we're talking about any type of trading, in whatever markets, please, start young. If you are in your 30s, go ahead and start now. Okay. If you haven't done anything, start now. Look into it. Do your research. Okay. Invest small amounts. Only risk what you can afford to lose. If all you can afford to lose is $5 right now, then so be it. Put that to the side. Okay. If that's what you need to do, put it to the side. Put that $5 aside every week until you have $100 or you have $50 or whatever it is, whatever you're looking to invest in, however much money you need, put that $5 to the side until you're able to get that amount of money. Okay. Do not feel ashamed that you can't do it. It is what it is, but at least you're starting. You're doing something. That is something to be proud of. Okay. You're doing better and doing more than somebody who's doing nothing at all and just complaining. Okay. Now, on top of that, when I said to invest smaller amounts, make sure you're continuing to invest over time. You don't just put $100 in the savings account and just leave it there and say, I'm going to be a millionaire. Savings accounts don't give you that much interest, right? Now, versus when you invest in the stock market, depending on what companies that you're investing in, you can get up to 10%, 20%, 30%, whatever it is on your initial investment. And we're not even going to get into different mutual funds and all kind of stuff like that. So there are certain things that you can do. There are plenty of things that you can do in order to build wealth, in order to gain additional, income. So please, ladies and gentlemen, just do something. Do something. And then also on top of that, like I said earlier, diversify your portfolio. Okay. Do not put all of your eggs in one basket. Y'all heard me say it. If I'm watching all of these multimillionaires and then I have these mentors that are multimillionaires that are saying, you need to do this, this. Guess what I'm going to do? This. That's exactly what I'm going to do because they've already made it, right? So, of course, I'm going to listen to them naturally. Okay. So the other thing is make sure you stand your ground. If you enter into anything and you have done your analysis, right? And all roads lead to, yes, this is a good investment. Yes, this is a good trade or whatever. Stick with it. Okay. Stick with it. Don't jump ship. And then if it goes in your direction, you're like, oh man, oh, that's messed up. I should have stuck with it. See? So therefore, do what Warren Buffett says. Stand. What did he say? Dang it. Stay the course. Stay the course. I say stand your ground. He says stay your course. Whatever. But just stick with it. Okay. Don't just be all over the place. It's okay. Especially if you have the guidance and the mentorship, you will get to where you're looking to get. Okay. So with that being said, I think that's everything that I had. I'm definitely going to end this with one of my favorite quotes. I pretty much end this every time I do like a live or something. But, it's my favorite quote. Hey, what can I say? So the quote is by the legend Arthur Ashe to use what you have, do what you can. Okay. Start where you are, use what you have, do what you can. My apologies. I got distracted for a second. Yes. So start where you are, meaning today. Use what you have, even if it's $5, and do what you can. Okay. And ma'am, if you can, just send me a direct message and we can communicate. All right. So with that being said, I hope you all have a great night. Definitely have a great weekend. Do whatever it is you need to do. Start now. Start now. Do not wait. There's no more time to waste. Let's go. Let's go. Let's go. All right.